Following the drop in the price of Tesla's EVs in China, there have been concerns about Tesla's car demand declining in this market. Several analysts and investors have disclosed their concerns about the increasing competition in the EV industry and how this may be affecting Tesla's market shares. And now, new data has shown that Tesla may be losing consumer mind shares as well. Hey guys, welcome back to Everything Tesla Stock. According to recent data on new vehicle intent purchase by Likefolio, Tesla seems to be losing some of its customers to other EV manufacturers. The data measured consumer mindshare change, which is a measure of consumers' awareness of a business or brand compared to its competitors. In other words, it refers to a brand's visibility and popularity, and also determines how well consumers have received a product. This data is therefore an important factor to manufacturers, as it gives a clear view as to how well their product is being received. The recent data compared consumer mindset change from 2021 to 2022, and it indicated that Tesla lost about 5% of its purchase intent volume, from 57.7% in 2021 to 52% this year. This shows some sort of decline in consumers' interest in Tesla cars, which could be a reason for investors to be concerned. Is Tesla losing its market shares to other EV companies? Let's find out. But before we do, if you like this type of content, hit the like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Tesla has had several episodes of financial woes in the past, many of which have caused investors to become bearish on the company and its stock, with many even predicting bankruptcy. In 2008, just as Tesla was getting ready to close a $100 million Series E, the global economy crashed, sending automakers spiraling towards bankruptcy by the end of the year. It was in the wake of this crisis that Elon Musk took over as CEO. Unfortunately, all the plans Tesla had for the $100 million funding round were futile. The automaker couldn't build a new factory or headquarters, and also had to delay the Model S launch and lay off nearly a quarter of its staff. Likewise, Tesla also faced hard times from 2017 to 2019. According to Musk, Tesla was about a month from bankruptcy as it struggled to ramp up production of its Model 3 electric car between these years. The Model 3 presented an existential crisis for Tesla, causing the car company to go through serious hard times, which brought it to the brink of bankruptcy once again. When asked how close Tesla was to bankruptcy when it was bringing the Model 3 to mass production, Musk stated that the closest Tesla got was about a month, adding that the Model 3 ramp was extremely stressful, and it was a great pain for a long time in terms of production and logistics. The Tesla Model first rolled off assembly lines in tiny quantities in July 2017, still far off from reaching mass production. And by November of that year, analysis was suggesting that Tesla would need more funding. In 2019, Tesla was still producing fewer than 63,000 of the Model 3, and Musk wanted to raise billions for the company at an event and via institutional investors. The car company had aimed to build around 500,000 vehicles at its Fremont facility. Between 2017 to this period, Tesla's shares fell by roughly 38%, and several investors lost their positive expectations for the stock. However, Tesla's stock price skyrocketed in price in 2020, and in August of that year, Tesla's stock was so high that the car company went on a 5-to-1 stock split. Tesla had split its stock 5 ways so that each individual share was worth only a fifth of what it had been, but investors got 5 times the number of shares. Before that, individual shares were selling for over $2,000, and so the split allowed smaller investors to buy a piece of the company. In December 2020, Tesla joined the S&P 500 with a valuation of over $600 billion, making it Wall Street's 6th largest company by market capitalization. While it was anticipated that the pandemic in China would affect the productivity of Tesla's Shanghai factory, the company's output again reached almost 185,000 vehicles in the first 2 quarters of 2020. At this time, investors had begun loading up more Tesla shares. However, while some investors were putting in money because of Tesla's potential for profitability in the future, some others only bought for fear of missing out on the fastest growing stock. Tesla had continued ramping up production across its multiple factories globally, and in June this year, more than 242,000 Model 3 and Model Ys were produced by Tesla's facility in Texas, and 16,411 Model S and X vehicles were also made. The automaker's most recent quarterly vehicle production volume came to 365,900 units, and its production level in Q3 increased by just over 41.5% quarter-on-quarter, and grew by approximately 53.9% year-on-year. However, while everything seems to be looking good for the car company in terms of its market fundamentals, this has failed to reflect in the stock price, which has been on a downward trend for quite a while. Following this constant drop in stock value, several investors have ended up selling their shares, as it's no longer profitable for them to invest in. And these are majorly investors who had bought shares because it was going up the charts. They were investing emotionally rather than logically, and so it could be pretty difficult to remain optimistic when the stock price is constantly sinking. Although Tesla stock is currently trading for less than it's actually worth and consumer mindshare may actually be decreasing, it does not change the fact that the automaker is making good production figures and does have a high demand for its cars. In 2021, Tesla Model 3 was Europe's top-selling electric car, overtaking the Renault Zoe and other popular models in that region like the VW Tiguan and Peugeot 3008 SUVs. Likewise, this year, Tesla's Model Y tops new vehicle registrations in Europe, according to market research data. This data showed that the Tesla SUV is fast becoming a vehicle of choice in that region. The major factors that may be weighing down on Tesla's demand are possibly the increased wait times for its cars, as well as the hike in car prices over the years. While one of Tesla's main objectives is to make its electric cars more affordable, the car company has been forced to raise prices, and this is having an effect on Tesla's car demand, although not at a very significant rate. Also, wait times for Tesla cars has increased. The Model X still has wait times of up to 11 months. The demand for these cars has been growing, and the automaker has had problems keeping up with the demand for its supplies, which has been worsened by issues with inflation and supply chain. Factors like wait times may be causing Tesla to record lesser percentage for its consumer intent volume this year, and by focusing on reducing wait times and lowering car prices, Tesla can get even higher market shares in the future. The automaker already disclosed that it had cut the delivery waiting time of all Model 3 and Model Y vehicles to a minimum of 1 week. According to popular entrepreneur and co-founder at Likefolio, Landon Swan, Tesla is the first to market in the EV industry in a real way, and has the most recognizable name and brand awareness that nobody else has. He also believes that Tesla has tremendous tailwinds, such as gas prices and an increased interest in EVs, which is not going away anytime soon. Although Swan sees Tesla as a leading company with a lot of potentials, he does, however, note that the car company has a lot of competition coming after it, and this is in fact true. Over the last few years, several EV companies have found their way into the industry and are gradually taking some of Tesla's market shares. However, this is not so much of a problem for Tesla bulls, since it will take a lot to overtake the car company from its position as the top leading EV maker. Tesla has reached a high level of success in its EV business, and it could not have reached this point without any strategic plans to guide the company through its darkest times. Likewise, Elon Musk deserves so much credit for Tesla's success. While the CEO of Tesla currently has a lot on his plate because of this new Twitter business, he is still a crucial part of Tesla and gets a lot of glory for the automaker's success. No doubt attacking opportunities, heedless of risk, and plunging headfirst into high-risk business decisions may have led the company to bankruptcy in the past, but it has inarguably been a part of its success. Is Tesla actually losing its market shares to other EV companies? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.